Well, mining's always been interesting. Understand that mining's a long-term gain. And the idea that somebody necessarily makes a difference over 4 years in a 10-year game is a different circumstance. I think in the very near term, as an example, to perhaps answer your question, the Trump regime will, I think, be more rational with regards to permitting than the regime that was just passed. You'll note as an example that one project in Arizona, the Resolution deposit, 1.2 billion tons, so world scale deposit of 1.5% uranium, 1.5% copper, pardon me, 3 times the average grade worldwide, has been stuck in permitting for 26 years. That's a problem. To the extent that the regulatory climate becomes what I would describe as more rational, that will benefit people who mine in the U.S. Certainly in Canada, if you're in the oil and gas business, the decision by Prime Minister Trudeau to pursue other employment opportunities is a wonderful circumstance. The idea that the Prime Minister didn't see that there was a business case for natural gas when all of his customers saw it,
Germany begging for it.
Germany begging for it, Japan begging for it, China begging for it, says a lot. And interestingly, the Trump election, I think, bodes well for Canadian oil and gas in the sense that Mr. Trump will perhaps remove some of the regulatory bottlenecks around the transmission of Canadian oil and gas out of Canada to the U.S. Gulf Coast refiners and to LNG plants on the U.S. East Coast. So I think there are certain circumstances where it makes a business case. I also think that the wind is in the sails for resource and precious metals reasons for reasons that are not geopolitical. You and I talked about it in a past interview. I think that the arithmetic around U.S. debt and deficits means that we're going to face higher inflation in years ahead than people believe we are, which will be very good for the gold price, irrespective of who leads what country. And I think 3 decades of underinvestment in productive capacity around many materials and increasing numbers of people bode well for other industrial materials. And going back to geopolitics, the emerging conflicts between, as an example, China and the United States, the need for raw materials to support industrial growth in frontier markets where they need to displace existing people like the European community in the U.S. means that perhaps the cost of capital for resource companies come down as industrial producers, OEM manufacturers, things like that, in places like Japan, places like Korea, places like the United States, places like China, participate in this global geopolitical game. And my opinion is very unpleasant with regards to that. I think every jurisdiction in the world is bad. I don't think there are any good ones. I believe that the government that's most dangerous is the one that's closest to you. Uh, I'm here in British Columbia. People in British Columbia, because they understand the risks here, think it's a great jurisdiction. I think it's a horrible jurisdiction. I've been treated better in Congo than I have in BC, or California for that matter, where I was from. So I think all the jurisdictions are lousy. Within Canada, my preference would be to be in Alberta, in Saskatchewan, or in Quebec, rather than other provinces. If I was going to be in BC, I'd want to be in Tahltan land. I'd want to be in First Nations land where the First Nations were intelligent and supportive of resource development. I think the U.S. regulatory climate is going to get a bit better, but remember that Trump doesn't control the individual states. So if you're looking to play the Trump game, look to play the Trump game in Alaska, look to play the Trump game in Wyoming, look to play the Trump game in Nevada, look to play the Trump game in Texas, and be very careful everywhere else. He's not the boss. In jurisdictions that look really, really, really bad, like Mexico, understand that the bark is probably worse than the bite. She has been dialing back some of her statements. Yes, she is a dyed-in-the-wool commie. She is. But she also understands that her party needs to get elected. And there are places in Mexico where, without mining, they're literally picking corn and picking beans. So what she has said is, to the extent that a mining project generates local support, local goodwill, that she will support it on a national level. What she has said is that localities are going to begin to control the process in Mexico. I happen to believe that's a lie, but it's a wonderful sounding word because that's the way it should be in Mexico. So politics, very, very, very mixed message. I have been buying, I had reasonable holdings of Canadian oil and gas stocks anyway because they were cheap. Now that the political winds have changed, there's a catalyst in place which will make something cheap not so cheap. And I like that. I already own them and I'm buying much more. What interests me recently, and this has been a factor, is the fact that the Fed is cutting rates and the long term rate has risen, which is to say that the Fed has lost control of the long end of the interest rate curve. What big investors are saying is that the Fed's estimates of inflation going forward are wrong. They understand that the Fed is trying to lower interest rates despite a strong economy for political purposes, but the risks to them are increasing rather than decreasing. So the Fed is lowering the short-term cost of funds, and the market is taking up the long-term cost of funds. That's extremely telling. The Fed wishes it wasn't true, but the Fed is beginning, as it did in the Clinton years, to lose control of the long end of the interest rate, and that's very interesting. I buy them for the 4 or 5 year context based on what I think they're worth. What the market tells me is that the gold price is going to go higher because inflation is going to go higher. It might be that there is less dumb money in the space as a consequence of a risk-on trade or a risk-off trade. And it might be that something that's a 45-cent stock becomes a 30-cent stock. I don't care much about that. I care about a 45-cent stock where I'm okay if it went to 30 because I think it's going to $4. So for me, I look at things very, very differently. The near-term cost of funds doesn't impact my decision at all because I'm not smart enough to be a trader. I'm an old man. And if you take away most of my downside, you can have some of my upside, particularly the upside is due to time. When I look at the interest rates, I'm looking at something very different. I'm looking at the economic signals, not the flow funds. Yeah, I mean, the industry is way, way, way overfunded. A lot of companies, probably 80% of them in the space, if they raise any capital at any price, their cost of funds is sub-zero because while they have a positive market cap, they have a negative enterprise value. They are, on a net present value, they're worth less than nothing. And it would be lovely, although it will never happen, if we raise the same amount of companies, but we raised it for 90% fewer companies so that we adequately funded the good companies and we starved the bad companies. It'll never happen, but it's something that speculators need to keep in the back of their. So let's think about that just for fun. It probably costs $250,000 a year to run a public company for legal, audit, exchange fees before you've paid rent, before you've paid for the copier, and before you've paid salaries. Let's say that bare bones G&A for an issuer is $500,000. Let's say that it is reasonable to spend a quarter of your capital deployment every year on G&A. What that means is that if your company isn't spending $2 million a year, that they have too much G&A. What on earth is somebody going to do with a $600,000 financing? I'll tell you what they're going to do. They're going to salary it up. That's what they're going to do. So scale, even in the small companies, matters. Companies that aren't deploying $2 million a year are, by definition, spending too much on G&A. They're inefficient. You know, I used to be really, really, really negative on ETFs, despite the fact that I'm the largest shareholder of Sprott, which is an ETF sponsor. But I used to look at some of these indexes, and there'd be, you know, if there were 35 companies in an index, there might be 20 that I wouldn't own with my own money. And the idea that I'd pay somebody a fee to own stocks I wouldn't own seemed inelegant. Then I recognized that most investors aren't willing to do as much work with me. And for them, they want the beta. They want to be in the market, but they want to be in a market in a way that allows them to spend time with their grandchildren, stuff like that. So I get it. I've come around there. I would rather see them in the market than see them not in the market for their own purposes, not for the market's purposes. So I'm more inclined towards ETFs now than I used to be. Somebody who gets in an ETF needs to understand that they're going to slightly underperform the market beta because there's a management team, you know, a management fee. But I'm okay with that. I think that people, even in ETFs, overtrade. Let me give you a really funny anecdote, Kai. I don't know if you know this. The huge Fidelity Mutual Fund Group looked at their whole investor base and they sliced it up by age, region, race, all kinds of things. And the component of their investor base that had the investment returns over 10 years, you know what they were? Dead people. Dead people. People who didn't trade at all, didn't chase the latest fad. They cut their customer base by every possible criterion. And the group that performed the best over time were dead people. The uranium price was about $20 a pound. And nobody wanted to own uranium stocks. Nobody. It cost the industry $60 a pound to make the stuff. They were selling it for 20, losing $40 a pound, and being dumb miners trying to make it up on volume. Now, the price of uranium had to go up or the lights would go out. Germany proved it, right? Conclusively proved it. The narrative I could explain about uranium. It was easy to understand, but because the price was lousy, because the stocks hadn't performed, nobody cared. Fast forward, the price goes from $20 a pound to $100 a pound. It doesn't need to go up anymore. The stocks are up fourfold, fivefold, sixfold. The narrative is the same, but now the narrative has been demonstrated by price, and everybody wants to own the space, just in time for it to be overowned and fall by half. Natural resource investors need to understand that in natural resources, you are either a contrarian or you're going to be a victim. Those are your two choices. They're both okay with me. But what that means is that you pay less attention to what's hot and more attention to what's not. Don't pay attention to what's in favor unless you're looking to sell something. Pay attention to what's out of favor.